What's going down, players, traders, and haters? Welcome back to the channel. It's your boy D. This is D's Daily DD. Remember, I'm not a financial advisor. This is not financial advice, right? So don't take it as that. Take it for educational and entertainment purposes only. All right, guys. So I have proof today that the shorts are suffering. I'm gonna explain to you why. As far as an AMC, the cost to borrow, I'm just gonna focus on that because I have talked about it in the past and what seems to be the chain reaction, the domino effect, and I really want to explain that. So I got some info for that. So if it's something that you wanna, learn about, hear about, well, I got you with the info. Okay. Thank you to the subscribers as always. I haven't been making a lot of videos because I don't want to come in here and just make a video just because, just a worthless video. I really always try to bring some content that has value and can teach people and so on. But always make your own decisions when it comes to your finances, your money, your investing. Please don't make any financial decisions based on my content. Right, so always remember that. But yeah, I'm excited. I'm not gonna, spend too much time here on the intro. I want to spend more time looking over the data and the information. So let's do it. Let's jump straight to it. So yeah, see, I got the energy today because I love looking at the data and the numbers are telling me something right now. So let me pull this up because I've been checking multiple sources. As far as Webull, the cost to borrow on AMC right now, it looks like it's around 58% at the time of this recording, right? So let me pull up this chart. Cool. And I do want to start with the information also as well as the CPI info. So let's just talk about the good news right now. The CPI info came out, it was 7.7 compared to last month that it was 8.2, which was way higher. Right now, it's looking okay, right? And that's because the government has been raising rates. And so we really have to wait and see for next month. It's always a month delayed, so we don't get it that exact month. So in my opinion, guys, if next month we also see a decrease in this 7.7, then we could be getting what's called a Santa Claus rally. Because as you see the way the market reacted today, there's a lot of stocks that went green, 10, 15, 20%. So it's a good sign that inflation could be calming down a little bit, right? So that helps. Okay. Here's the article that I found too. It's saying here's the inflation breakdown for October 2022 in one chart. The consumer price index, a key inflation barometer, jumped 7.7% October versus a year ago, right? So it's pretty high compared to a year ago. Both were cooler than expected. A sign inflation may be moderating. Okay, so they were cooler than expected. That's why you're seeing this rally right now as far as the CPI data. But yeah, let's get back to the cost to borrow information. Yeah, this one. Okay, guys. Here it is. All right, so signs AMC is about to pop. You're tapping the master trend line while the super trend can flip. Okay, I'll show you that right here. Let's go to the chart. And what I'm talking about is right here, right? So you see this arrow here, the red one? That is the super trend. When this flips, right, usually we see a nice run or a rip, right? And right now we're close to it because we are tapping this master trend line that I've had from this top, and it's tapped it multiple times, but this is where things could get nasty because if we can cross this, I believe we'll see big momentum and shorts will start to cover at least some. I don't know how much, to what extent, but I believe it will be a nasty move. It can be, right? Because the super trend can flip and you have the RSI sitting right in the middle, right where it needs to, where I told you guys a couple days ago that I was looking for the price to start moving up because the RSI, right, it was too low. It was in oversold territory. So it starts to move back up, right? Like in the past, right? So there's that example. I'm going to go back. So our size around 47-ish. We just need to sit still, in my opinion, guys. Don't move a muscle. Like right now, the shorts are cornered. If we start moving shares and doing stuff, they can always swap things out and trade and make deals, right? So I think the best thing we can all do is just sit still and wait, because we have this proof right here. And I'm talking about like DRSing and things like that. Like I'm literally not moving a finger because when we squeezed in the past, when GME squeezed in the past, our shares were not DRS. That's something that came along later, and I don't think that's the move right now. I think it's better to just for everyone to sit still. The Fed is raising rates. They continue to raise rates. So right now, as of November 3rd, they did the last one. And like I said in the past, it's going to affect the borrowers, right? So who borrows money, right? It's people and it's short sellers. And short sellers have to have a margin account. They have to borrow margin. They have to have certain margin requirements, right? So the CPI info was lower today. If the next report is lower, then we get a Santa Claus rally in December. Best part is the cost to borrow is exploding, which I got right. I talked about it in the past because I've already caught on to this, that this puts pressure on the shorts. This is that fee that they're paying on the side. If it gets out of control, it's going to force them out, okay? Because it's what has happened in the past. And I'm talking about May 7th, 2021. It was around 11.3%, and then it shot up to 90%, 96%. I have the screenshots. I've talked about it. I've shown them in my past videos. How from here, right, May 7th to May 12th, the cost to borrow fee went from 11 to 90%. And what happened to the stock price? It went from I don't remember the exact prices, but the top was around $77, $72, right, on June 2nd. So that's what happened then, and that's what I see happening right now. That's my personal take. November 4th is when we were at around 15.8%. And then you see the cost to borrow rising, and the average right now is around 35% from what I see. With the max, according to Ortex, was 314% right around this time of this recording. So will the price start to run soon? Because think about it just logically. If you're holding a short position, but the fee is getting expensive, like depending on that short position, you have to pay more and more and more right on the side in order to hold that position. And that's what I'm looking at right now. Okay, so here's the proof. I don't know why this hasn't updated. The red line, it's supposed to show right up here, around up here, 35%, with no shares available. So the reason that it could not be updating is because I've seen the number 0 shares right on a couple different sources that there's no shares to borrow. So it only updates when there's shares to borrow, but the last update we got was 35%. So this red line should actually be up here, right? And that's what I said in the past videos. There's a few videos where I've talked about it where I could see the fee start to explode because the government is raising rates. Okay. Again, here, according to Stunko Tracker, there's no shares to borrow. You go to Fintel, there's no shares to borrow. And let's see, let me refresh this. 38% is the latest they have cost to borrow fee. So again, like I want to see this thing go up to the 60, 70, 90%, over 100% if possible, right? It's better for us. It puts pressure on the short sellers. Let's just go look at the charts. Again, I already talked about this. I'm not gonna spend too much time, but I want to see the continuation where we break above this trend line, because I feel like there's a lot of pressure there that needs to be released. So then the first place I think we would struggle is well, first off around 680 to 7, and then 760 to 8, around there. If you're looking at this line right here, right, or it's this chop right here. So there's that. Current Ortex data from TGS Trades here was posted earlier, and that's when I noticed. I was like, holy crap, what is going on, right? And the cost to borrow was, according to this, which was a few hours ago, 147% average, and the max 344%. That's insane, dude. Like that's a lot of pressure. This was earlier. It was saying 314% with 128%. And remember, there's vulnerable players, everything that's going on with crypto and the hedge funds, and what like Credit Suisse has posted out there, has stated conservatively, to the extent that we have sold assets that we do not own or have net short positions in any of those if any of those markets, in an upturn in those markets could expose us to potentially significant losses as we attempt to cover our net short positions by acquiring assets in a rising market. Vulnerable players out there. Okay, so yeah guys, here's the fee, right? Again, multiple websites already reported it. This one says only 1,000 shares, and as we know, a stock loan fee, aka borrow fee, is a fee charged by the brokerage firm to a client for borrowing shares. And this is what's interesting. This is why I expect a good run here soon with AMC, because the price, right? This is the price line, and this is the fee line. So when you compare it, whenever the fee rises, shortly after, the price starts to rise, right? So that's when it came down, the fee rose again, and the price went up. Now what's happening right now, the fee is rising, so I would expect the share price to follow in that form. Okay. So yeah, guys, that's what I wanted to show you today. Quick video, good information, right? I hope you appreciate it. I think that covers everything on my side. Oh, last thing. Let's just go back up and kind of see what's going on with the sentiment, all right? Just to wrap this up, people talking about the fee. The IRS is the real winner of the lottery. 2.4 billion winner takes home 628 million after taxes. And this liquidity crisis is what we AMC holders have been waiting for. Once the liquidity gets too low, margin calls will be going out. It will be a hedge fund eat hedge fund world as they fight to undercut each other, and weakest hedge fund managers will be forced to cover on their bad bets. Crazy stuff, guys. See, just everyone's noticing. That's the beautiful thing about technology, that it's very fast now. Information travels fast. So yeah, this morning I got hyped when I saw this fee and everybody posting it. It was good to see, right? 58% according to Webull. So yeah, guys, let's get it. That's all I got for you guys. Let me switch this up, wrap it up. And thanks for stopping by the channel. We'll have to wait and see what happens. There's also that theory, right, of T plus 90 with Abe, which lands on Thanksgiving weekend, which is crazy as far as like the number 4. Adam Ayers talked about the number 4 in different posts. Maybe it means that something's going to happen on Thanksgiving week, because that's a 4-day work week as far as I know. The market will be open the day after Thanksgiving. I think it's usually a half day, but it's open. So yeah, it's exciting, guys. I hope you're excited as I am. Hope to catch you in the next video. Peace.